Hey, good morning. Money Tuesday now. You know, we all know that we should have life insurance, but what type should we have? There are several choices and it can be confusing. It's something you really don't want to think about, but we do need it. Marshall Clay of the Welch Group joining us this morning to talk about group term, private term life insurance. Good morning.
Good morning, Janice.
Yeah, it's one of those things we don't want to think about, but we all need it to to protect our families, right?
You're exactly right. It's really just a risk management tool. And I get a lot of questions from people. They say, look, I've got life insurance through my company. Do I need more or do I need to supplement?
Because the minute you leave your company, even though you may have great life insurance, you no longer have that.
You're exactly right. I think that's one of the traits that we're going to talk about this morning as far as group term, that a lot of times that insurance is not portable, which means it does not follow you after you leave your job, whether it be through layoffs, whether it be through you just wanting a different job. And so it's very important for you to understand these different types of insurance and their attributes.
All right, let's look at the different types of insurance.
Yeah, so when we're talking about group term life insurance, it's employee sponsored, so it's typically an employee benefit that you receive. There's no underwriting, and so that's actually a key aspect of this, because if you have a pre-existing health condition, there's no underwriting that you go through. I mean, that's great if you've got a pre-existing
So it means
condition.
they're not checking on anything.
Correct, they're not checking your health, essentially. And so the coverage is typically a multiple of your salary. So if you make $50,000 a year, typically it's 2 to 3 times your salary that they'll cover you for. And then the term is fixed, just like private life insurance. It's fixed for the life of the employment. And like I said, it's not portable.
Okay.
So in contrast to that, private term life insurance, it's paid by the individual.
Okay, let's switch to that graphic if we can. I know they're working on it there.
There we go. And so the underwriting, yes, there is underwriting. So that's the advantage of private life. You at least go through that.
Explain underwriting, because not everybody understands what that means.
So anytime you apply for life insurance, typically they're going to send somebody out to do blood work. They're going to ask you a bunch of questions about your health history. And so once they do that, they evaluate how insurable you are. And so then your premium may fluctuate up and down depending on if you smoke or drink or don't exercise.
Okay.
And so the coverage, you typically max out at around 25 times your annual salary. You may need that much, you may not need that much. And then private term life insurance also comes in fixed terms, and typically it goes up to a max of 30 years. You may or may not need that much time. But I think that the key takeaway here is that the private term follows you as long as you continue to pay the premiums, whereas group term is only around as long as you're with that employer. And I think because you don't go through that underwriting process, if you leave your company and you say, okay, well now I can go out and get private term, if you have some sort of pre-existing condition that prevents you from getting private term life insurance, you're putting your family at a great deal of risk there.
And when we're in a job and we have the insurance, it's hard to think about paying that premium. And that's why a lot of people don't do it.
It is tough, right? I mean, group term life insurance is certainly less expensive than the private term life insurance, but I always say, look, the portability trumps the expense.
All right, real quickly, you're going to hear people when they're offering you insurance, you're going to hear the term whole insurance as well, right?
Right. And I don't want to get too, because it's really case by case specific, but I think more often than not, whole life insurance is not really all that appropriate. There are certain circumstances, so you want to get with your financial planner or your CPA to determine if that's right for you.
Okay.
But typically it's more expensive. If you think about whole life insurance, essentially what it is that the insurance company is going to be on the hook to pay that life insurance benefit as long as you continue to pay the premium. So it's going to be more expensive, and it's going to be more of a cash flow burden, because you're going to have to pay more on an ongoing basis. So I typically recommend private term or group term life insurance. That's really what most people need.
All right, good advice today. All right, Marshall Clay, good to see you. All right, still ahead today, the weather.